Hello again, and welcome to S&P Global Ratings Fixed Income in 15, a 15-minute chat with a market voice and an S&P executive. My name is Joe Cass. I head up the market outreach team here in the UK. Today, I'm joined by Grover Burthey, Head of ESG Portfolio Management at PIMCO, and Richard Mattison, President of S&P Global Sustainable1. Thanks very much for joining me today, Grover and Richard.
Pleasure to be here today.
Thank you very much.
So before we start, just a quick reminder that the views of the external guest on the show today are their views alone, and they do not represent the views of S&P Global Ratings. Okay, Grover, let's kick off with some questions for you. Grover, can you give us an overview of your role and your responsibilities at PIMCO?
Sure, absolutely. Thanks, Joe. And again, happy to be here today. So at PIMCO, I am head of ESG Portfolio Management within our portfolio management group based here in our Newport Beach headquarters. For PIMCO, ESG is a top priority, and that means with regards to integration across our platform at large, across different asset classes, different parts of the market, different geographies. We really want to make sure that we are applying certain risks and considerations related to ESG themes into our investment process and decision making to ensure that we have analytics that are properly measuring what are growing related sustainability data points and specific investment themes, and that we also have a suite of vehicles for clients and investors who are focused on specific ESG optimization and desired outcomes that gives them a portfolio with compelling risk return and serves the needs that they have. And as one might imagine, with so much information coming into the marketplace with regards to ESG, many clients think about it differently. And so it's important for me to be partnering with colleagues and peers across the firm, from our product management group, from our client management group, from our compliance groups, our regulatory groups, and many other peers inside of PIMCO to really be taking into account all different considerations in this regard, ensuring that we're very well placed and well positioned in that.
So Grover, what big picture ESG and sustainable investing trends are really front of mind at PIMCO right now?
Sure. The most important and prominent theme that we're focused on is really net zero and decarbonization. And that's for a few different reasons. One, there is an increasing receptivity in the marketplace that not only do certain solutions need to be put into place to manage the warming scenarios, to manage the current trajectory of global temperatures, but that the private sector, can continue to be and hopefully be even more of a major contributor to that process and to that transition. We have a range of different initiatives within the firm across cross-functional groups to develop tools, to develop metrics related to carbon emissions, carbon intensity, the carbon footprint of an individual portfolio, with the goal of continuing to be able to have a leading investment process to try to focus on optimization regarding carbon and environmental related risks. Furthermore, here at PIMCO, naturally a fixed income leader, a major fixed income asset manager, we're heavily involved in the growth of the ESG labeled bond market. That includes green bonds, social bonds, sustainability bonds, and sustainability linked bonds. That is a market where issuance of such securities eclipsed $1 trillion last year. We expect that the growth in that space, in that primary market, to continue this year. It's bringing in a range of different issuer types. Certain sectors led much of the issuance there over the last several years, including utilities, including REITs, but that's now expanding into a range of different corporate issuers, as well as sovereign issuers, as well as securitized issuance. And it's quite exciting to see many of these sustainability-related themes manifest themselves into frameworks from issuers, into then subsequent reporting and updates with regards to those securities, ideally leading themselves to specific milestones and target settings, whether they be science-based targets, whether they be specific targets related to energy usage and improvement in energy efficiency, or a host of other sustainability-related themes not exclusive to energy, such as social targets, human capital management, deforestation, nutrition, really a range of topics where issuers can give a lot of transparency to the market in terms of their goals and ambitions.
Great. Richard, S&P Global Sustainable1 is still in its first year. as a division of S&P Global. So you're running the division. So I wanted to know how it's going so far. So what are the main challenges and what has the reaction been from our clients and the market more broadly?
Yeah, thanks, Joe. So we put together S&P Global Sustainable1 and launched it last year because we had so much going on in terms of ESG and climate analytics across the firm that we wanted to bring that together and coordinate that across all of the S&P divisions in a more coordinated fashion. So within S&P Global Sustainable1, we have approaching 600 people. And our role is really to form a sort of centralized source of intelligence for S&P Global and also for the market. So we serve all four divisions with evolving and innovative ESG intelligence. And that's been going really well, I would say. And so what we do is we put together, for example, on climate, 700 billion data points on physical risk. That's now made available in the context of the indices that are developed by S&P Dow Jones Indices. It's also made available to credit analysts for S&P Global Ratings. And it's also available in terms of our Capital IQ Pro, which is our desktop software that allows you to manage various different workflows for asset managers and banks. So really, our role is to kind of ensure that we continue innovating. Some of the areas actually that Grover mentioned are top of mind for us: net zero, deforestation, some social issues. All those types of areas require far more investigation than has gone on in the past if we're really to make a transition to a more sustainable future. And that's our priority, is making sure that we continue to innovate. We're investing centrally in that innovation quite heavily, and you can expect to see much more from us in 2022.
Great stuff. So Grover, what are the main challenges you face as a portfolio manager at PIMCO in the ESG space today?
Sure. You could call it challenges. You can also call it opportunities. I think one topic certainly that we see from dealing with clients globally, investors globally, issuers globally, is that the definition of ESG is not uniform, and many market participants think about it different ways. We ourselves use a fairly comprehensive and detailed materiality map to help guide us in terms of what is important for ESG, depending on what part of the market one is discussing. But with that said, I think that there is an inclination to hope that there is sort of a one-size-fits-all or a uniform way to apply ESG from an investor standpoint. And that's not necessarily the case. We have a range of portfolios here with themselves different mandates under our ESG business, ESG Total Return Fund, an ESG Income Fund, an ESG Emerging Markets Fund, an ESG Global Investment Grade Credit Fund. And even within those, while we work to be as consistent as we possibly can in terms of our internal ESG scoring and frameworks, in terms of how we apply our own analysis alongside fair value and other relative value tools that PIMCO as a firm uses, even within those mandates, sometimes the expectation on certain investors is not necessarily consistent. And so it's really, really critical for us that in terms of our investment process, in terms of our decision making, we're using these tools in a consistent manner, but then also really communicating with our own stakeholders, communicating with our clients to really help them understand what's important in terms of our process, where we may differ from whether they be data providers like S&P or peers or competitors. And ultimately, to the extent that certain clients want custom solutions, providing those for them as well, and really ensuring that their objectives are being met alongside PIMCO's time-tested process of delivering reasonable risk-adjusted returns.
So, Richard, you attended the most recent UN Climate Change Conference, where one of the objectives is to reach net zero before 2050. So we're now just in 2022. So in your opinion, where are things going well, and what areas do improvements need to be made in order to hit that goal?
Yeah, I mean, COP26, I've heard people describe as a maelstrom of unfulfilled promise. But actually, I do think that, there were several significant moments during COP26 in Glasgow. And I think that one of those was the announcement, by Mark Carney under the auspices of the Glasgow Financial Alliance for Net Zero. where you now have 130 trillion of assets under management, signed up in some way towards a net zero destination. So, if you like, we've definitely plotted the destination in the GPS. I think one of the challenges is, what is the route that we're going to take to get there? And I think that's where we need to see a lot more work. And it's not surprising, this is pretty complicated stuff, but I think, how precisely do we get going on a real economy transition in the very short term? And what do we expect of different sectors? What do those pathways actually look like? What kind of investments need to be made? What are the obstacles? All of those details really are being thrashed out right now, and at the moment they're sort of being thrashed out behind closed doors. And we'll see more coming from various different groups over this year. So really, what we need is more near-term information to appraise success. And this is pretty essential. We're already in the process of scrutinizing the extent to which climate change can affect credit quality. We're looking at the extent to which there may be stranded assets. We're assessing the financial losses associated with the physical impacts of climate change. So, we really are, this is important. We're actually looking at the downside scenarios associated with climate change. What we need to be also looking at and cognizant of is what is required to transition. So I think that's one of the major things is that we've plotted the net zero destination in the GPS, but we don't necessarily know what the route is yet. And the next few steps and the next few months, in fact, will be critical to really understanding that in more detail.
Great. Thanks, Richard. So Grover, how important is issuer engagement in the investment process at PIMCO when it comes to ESG?
Well, it's incredibly important, and it's an area where we believe we can add a lot of value. Continuing on Richard's points, there have been many commitments made. There have been many pledges and many documents signed by a range of global market participants or other policymakers and so forth, in terms of trying to get to a certain carbon footprint for the globe, in terms of trying to align ourselves with a net zero pathway. And it's on the one hand, right, in 30 years, 40 years, 50 years, progress will be made, and hopefully enough progress will be made. But in terms of what happens over the next 12, 24, 36 months, 5 years, we really are shifting from a point where it's going to move from, hey, what are you pledging to do? What are you aspiring to do? To showing some evidence that progress has been made, to showing some actual evidence that you will hit some of the goals that you set for a longer period of time based on incremental progress at that point in time. And so that's where engagement can be really helpful. It should be constructive and collaborative in nature, right? In terms of how we deal with borrowers, where PIMCO has exposure. PIMCO is a lender or an investor, but really understanding what investment is being done. That's investment in both capital as well as resources, as well as personnel. It's understanding if a company is sort of prioritizing some of the commitments they've made throughout periods where the markets could change, right? It's notwithstanding the volatility of the last few weeks, we've been in a relatively open capital markets environment. But to the extent that things do perhaps become less open for capital raising, are you still going to maintain your commitment on some of these initiatives, which can be quite capital intense? And so engagement is a very helpful tool to really first and foremost put out frameworks, put out what we as an investor, as an asset manager, would expect to see from issuers, trying to give advice and feedback and guidance in terms of how they can actually implement some of the pledges that have been made. But with all that said, we want to be balanced. This is not exclusive to climate or carbon. We have a range of engagement-related themes and initiatives across sustainability and ESG, and engagement is an important tool for that as well. So ensuring that companies, for example, are giving more information with regards to social impacts of their business, access to their products from perhaps communities or populations that have had less access in the past, the safety of products, the sort of ability to productively manage their workforce and to do so in a way that minimizes the risk of employees sort of moving or dissatisfaction and potential controversies with regards to human capital management. And so it's really a way for us to first and foremost manage our risks, manage our portfolios, try to optimize on many of these ESG factors and hopefully make a real difference on behalf of our clients.
Thanks, Grover. So now we're going to move on to some non-market related questions. Richard, I'll start with you. So Richard, your path to becoming president at S&P Global Sustainable1 is definitely an interesting one. So you completed your PhD in Neuroscience at Edinburgh University. Then you spent 15 years building Truecast, which was eventually sold to S&P Dow Jones Indices in 2016. So can you tell us a story of how you built Truecast?
Sure. Yeah. I mean, I think when we first thought about the concepts associated with Truecast, it was really kind of what the name says. Actually, we wanted to put a true cost or a true understand what is the true value of externalities that are unpriced by markets today. And the reason for that is actually at the time there was a fair amount of greenwashing going on. So you had a fair few companies that were saying they were sustainable, 100% sustainable, and they were climate friendly and things like that. And the truth is, when you actually examine the reality, there were certain companies that were making small investments in solar and saying they were entirely renewable and things like that. And so we felt that there was a need for better information flow in markets. And yes, things like climate change and some of the other topics associated with ESG are ethical issues, but there are also economic issues. And we wanted to shine a light on the economic nature of ESG, in addition to what is, a narrative around the ethical nature of ESG, which is all associated with our own personal values. Because by painting that economic picture, we feel that really would help capital markets in particular understand some of the risks and opportunities, and why ESG and in particular climate shouldn't really be ignored in the context of investment and banking decision making. So that was the fundamental rationale behind why we put together the company, was to deliver a better understanding of why some of these issues are really economic and financial, linked to financial decision making. And that was the genesis of what we did. And so we were the first to understand the carbon impact of a portfolio and measure supply chain impacts as well. And we did a number of other things, like, for example, create an environmental profit and loss statement for Puma, the footwear company, and various other things like that. But we still are in a position where we are yet to fully understand unpriced externalities in markets, but I think we're making a lot of progress.
Fantastic. Grover, sandwiched in between your two stints at PIMCO was a role as a Deputy Assistant Secretary for Transportation Policy at the U.S. Department of Transportation, so based in D.C. How was your experience in government, and what were your main takeaways from the role?
Well, first and foremost, it was a pleasure to be able to do some public service, and I felt very honored to have that opportunity, and certainly found it to be extremely rewarding and learned quite a bit. It was the first and only role I've had in my career where I wasn't directly involved in markets on a day-to-day basis, and so that was certainly an interesting shift in perspective. But in terms of takeaways, transportation was interesting to me because of the overlap with infrastructure, which also has obviously many different private market applications, and so really learning there in terms of what can be done from whether it's a public policy or a regulatory or even legislative angle to try to improve the efficiency of infrastructure, to try to better incentivize and align public and private actors to make progress there was really something that was fascinating. And what I've tried to do is take some of those lessons and then apply it in my return to PIMCO. I came away with a newfound respect for policymaking. It's oftentimes I think that the assumption is that things in areas like Washington are bureaucratic and inefficient. And while that can be true to some extent, it's also quite impressive just how much has to come together to make policy work, to implement it. And there are a wide range of very, very talented and very smart people who are working to do that every day. And then lastly, I got to meet phenomenal people from all over the country, many different cities, counties, and states, and that was quite enjoyable as well.
Great. So Grover, big picture question for you now. Who is your professional role model? So that can be someone you've met or someone you just admire professionally.
Yeah, that's an interesting question, and I'll say something that's perhaps out of mainstream response from financial markets to that one. I grew up in Durham, North Carolina. I have been a long time fan of college basketball, and this is the last season for Coach Mike Krzyzewski from Duke University being a college basketball coach, and he's someone who, ever since I was really a very very young fan, watched and admired, and I think he's a great case study and role model in terms of longevity, consistency. Being in a role like that for 40 years plus and having that degree of success and consistency is very admirable, and I think it has direct sort of lessons that can be extracted in terms of investing in markets. Having a process that works, having great colleagues and peers around you, and really trying to establish a culture of striving for excellence in everything that you do. But it'll certainly be a change for college basketball to have him move on.
Great. So Richard, same question goes to you. Who is your professional role model?
I think it's a really difficult question to answer, actually. I've met a lot of really fascinating people in varying different areas. But if I had to single out kind of from the world of business, I would actually say that there's a couple of names that spring to mind. I would say that Paul Polman is someone I've spent a bit of time with. And what's really great about his leadership style is actually he takes a lot of time to listen. I attended quite a few of the executive sessions under his leadership at Unilever, and he really listened a huge amount. And in the process of listening, I'm sure learned. And so that was, I think, very much reflected in how progressive Unilever was over the last decade, and continues to be. His more recent work is really to be applauded. The other name is Jochen Zeitz. Jochen Zeitz was the CEO of Puma. He's now the president and CEO of Harley Davidson. And I really, he is one of the bravest individuals in the business world I've ever come across, to have the audacity to publish an environmental and profit and loss statement that shows that you would make a huge loss if you had to pay for nature. And show that to financial analysts was somewhat against some of the counsel he was receiving at the time, and to have the audacity to go to Harley Davidson and develop an electric range also is a really interesting thing. So I think those two are two people I've learned a lot from, personally, and there are plenty of others to count as well. But those are the two that kind of spring to mind at the moment.
Great. So Richard, what keeps you busy outside of work, and have you taken up any new hobbies you would like to share?
Yeah, I got quite a few hobbies, and my travel holiday hobby has been somewhat curtailed over the last couple of years. But something, this may sound a little bizarre, but the practice of Shinrin-yoku is something that I've been taking up recently, which is forest bathing. I'd in these constrained times where you might not be able to travel as far and wide as you might otherwise do, appreciating nature, surrounding yourself with trees, smelling the oils that are emitted from trees, is a really sort of good practice for all of us, and have been shown to help in particular with many mental health problems. So I would recommend Shinrin-yoku to everyone, and it's something that I've taken up recently and reaped the benefits of.
And just to follow up, if I wanted to do something like that, would it require me so I go to a forest and you just kind of spend time in the forest, kind of walking around, appreciating what's around you, a bit like kind of mindfulness in a forest? Yeah.
It's kind of like forest meditation. There's some great books on that. I can send you some links, but it's exactly that. But really, be mindful. It's not just walking through. It's actually how much can you notice and be present. Definitely, yeah.
Very cool.
Something we can all do as well, I think.
Great stuff. So Grover, last question of this episode goes to you. So on Fixed Income in 15, I usually interview leaders, influential individuals from the world of finance and economics and business. So who would you recommend I ask to be a guest on a future episode of the show?
Sure. Here at PIMCO, we do a series of economic forums, four per year, and one is called our Secular Forum. It's really meant for us to think about what's important for markets and portfolios over a longer term horizon. We did that in September, and I had the pleasure of hosting a conversation for the benefit of the firm with Daniel Yergin and Megan O'Sullivan. Daniel Yergin currently with IHS Markit, and Megan O'Sullivan currently at the Kennedy School at Harvard. Both prolific writers, have both written in recent years about the geopolitical environment with regards to energy and oil and gas, in particular, the new map by Daniel, Windfall by Megan O'Sullivan. And it was a phenomenal conversation, particularly with so many topics right now coming together. Whether or not peak oil is near term, how fast, how rapid the market share and contribution from renewables can actually matter in terms of net zero, what governments have going for them and going against them in a market where the world powers itself in very different ways. Just what that means for volatility, what that means for inflation, what that means for commodity prices, was a conversation that certainly was well received here, and I think was very beneficial for our process and how we think about risk and reward over the next several years in this space. So two great speakers. I'm a bit biased because I spent a lot of time with them last year, but would highly recommend them. And just in terms of other options for this podcast in general, I think it's there's going to be so much happening in ESG and sustainability over the next several years. You'll have to do frequent updates because what I say now may change. If you call me back in 3 months, I may have something quite different.
Absolutely. Well, great stuff. Thank you both. Thanks to Grover, thanks to Richard for your time today. It's been really interesting to get your views. So for everyone watching, everyone listening, see you next time on Fixed Income in 15.